All right, ladies and gentlemen, good morning, welcome, and crap. I started my live stream without my water. I'm gonna go get my water. I'll be right back. All right, I'm back. Sorry, that took about a minute. I had no water. Can't do a live stream with no water. All right, y'all, how you doing? So yesterday, interesting move on the NASDAQ. I didn't notice it until after. Actually sold down pretty hard on the NASDAQ yesterday. You can see right there the volume was elevated. Pretty much average volume. Yep, average volume yesterday. And so far today, kind of slowly gapping higher. 21 minutes to the open. I didn't work much on that spreadsheet I was talking about yesterday. But let me open it. And nope, that's Power Hour spreadsheet. Okay, here's my... Cool. There's my stock. So we'll go through the pre-market movers real quick. Autodesk. Cool. $10%. Wow, $13. 150? It doesn't say 150, but 10% from 135 is $13. It should be about 150. Looks like a little flat base here with a failed breakout. If you omit that, looks pretty good. SYBX, SPLK, which I think we've seen before. Yeah, we've seen that down at that 200-day moving average. Crawling up 8% today. Son of a bitch. And ICHR is Icon Industries. Icon. ICOHN. Anyway, let me Google it. ICHR. iCore Holdings. Okay. It's up to $24. Okay, which isn't too bad. Kind of had a little bit of a trend line going on there. Looks like that's been broken. Not quite sure how far that's gonna get, but it came down over 50%, almost 50%, 47%. Sorry, a little sneeze attack this morning. Ugh. All right, NASDAQ pre-market movers. Oh, that was the NASDAQ pre-market movers. Okay. And do the other one then. Market Watch pre-market movers. There we go. Biggest one only up 11% today. FBP. First Bank Corp. Okay. Nice little base right there. Around the $8 level. MDXG. It also got Autodesk. KOPN, SSC, Cron again, SYBX, ICHR again, Spelunk again, VSI, MNOV, Opera. Interesting. So really the biggest interest to me is Cron moving up. 925, gapping up again. Very bullish action in Cron. It's just very bullish. So that's where Cron gapped up to. This is one you have to buy in a pullback. You may get one today. Maybe it gaps and comes down to yesterday's close, but I don't know. We'll have to wait and see. If you notice recent price action, we have this initial gap off of earnings, which was never filled. Subsequently, this closing gap was never filled, but we did come down to the open of this one. So maybe we'll only come down to the open of this one on Cron, and have to go from there. Didn't take a look at Tesla yesterday. Let's take a peek here. So Tesla having a pretty good little declining trend line right there. Looks like that was broken, but that's a pretty aggressive trend line. That one was gapped up through. Unfortunately, I can't control Z on here like I can on TradingView, so it takes longer to manage these. Cool, declining pennant, breakout, Fizz is moving on the weekly. Okay, let's see what IBD has to say. Move this in the window here so y'all can see it. I do the pre-market movers outside the window just so I can type them in easy. Moon versus Mars fight might leave US lost in space. Interesting. Futures rise, one tech, one retail stock on the breakout. Or breakouts to watch. Top software stock builds new base. We like new bases. Now. We like now. Ooh, yeah, very nice. Very nice. We've had now in this channel. I think we've looked at it once or twice here since the start of the Stocks Power Hour, but alright, now is building a new base. That's good. Alright, that's pretty close to horizontal. So, pretty good look there and now. We looked at the fundamentals on now a long time ago, and it's ridiculous how good now is. So ServiceNow is the top spot among growth stocks to watch as it's building a new pattern, also known as a base. Yeah, definitely a flat base, huh? Composite rate of 99. It's in the top 1% of all stocks. Ooh, they've got Five9 a little bit above it, and Paycom. Wow, all in that same industry group. Look at that. EPS change last quarter, 123%. Last 3 quarters average EPS growth, 83%. You guys, anyone here not know what EPS growth means? So all green dots. Looks like one red dot. Revisions were estimated down a little bit. ROE is 46%. It's fantastic. Margin 17. A little light for a software company. 32 billion. Very interesting. Very interesting there. All right, so I'm going to work on my spreadsheet here since no one's being too chatty. I think I'm going to try to do this maybe half an hour before the market closes. Maybe move my time frame. There we go. I'm not sure what I call fizz moving or basing or looking to move. It's kind of looking to move. FFIV is already moved. Generac. Generac's already moved, but it's failed to... Okay, so we'll do already moved. In buy range, Generac, with our buy point at 54.19. $116.30. Insert note. Oh, what the heck? I like it. I like it. Okay, PKG is in the base. Insert note. Declining triangle. And Twilio yesterday had a great day. Never did get a chance to buy it at a good entry point. It's a shame. It wouldn't have been a big position either. I mean, it would have been a micro position. Shutterstock is in a buy range. $49.78. Looking good. TTMI still basing. Is kind of looking to move. $19.7. BE is off the damn charts today. Or has been off the charts lately. Is it gapping up? Nope, not much. Not really. What is it, 23? Let's call it $30. Timus. How you think? Come here, buddy. Okay. You like when I hold it tight? Or you like when I'm loose? You like tight. Everyone likes tight. That's why you squeeze a little bit when you give hugs.
Daddy,
yeah.
Why do you have no subscribers?
No subscribers? Well, this is my stocks channel. I have 4 people watching right now. They just popped in. It was 3 and 4 as I was watching it. Yeah, but no one's chatting. It's pretty empty today. It's my real stocks channel. People don't like stocks. They like cryptocurrencies. So if I were live streaming on my crypto channel, I'd have probably about 200 people right now. because I'm on my stocks channel, I have 4. Pretty weird, huh? What's up, Grazer? Good morning. Yeah, it's pretty light on chat, so I've just been going through the stocks that I'm looking at, kind of cataloging them, categorizing them, things that people should do. Everything's a Ponzi scheme, Grazer. Everything. All right, pull up a chair. You like that? Okay, you can move it if you want to. Yeah, Grazer, everything's a Ponzi scheme. Same with the stocks. You're just buying it, hoping to sell it later for a bigger value. That's all it is. That's why the U.S. has the Federal Reserve Bank. It's the official Ponzi scheme of the United States. All right, so I had BE, TMUS. Did I add TMUS yet? I did not. So TMUS is kind of in a buy range. What's up, Eli? Hey, can you get in the Real Crypto Power Hour or no? Oh, market opened. See what Cron's doing. So Cron gapped up there. Okay, looks like it came down a little bit from where it gapped up to. Maybe a gap and crap day. We'll see. It was up 8% according to the NASDAQ. Yeah, I'll get you in both, Eli. I didn't know if you just didn't care, didn't want, but I was going to do that this morning anyways, actually. Subscriptions, members, transactions. Anyway, I'll do that. Do you want me to, yeah, we'll talk later about that, but I'll get you in there. Yeah, of course. Workday at 1.64% today, continuing to move. My preferred method of stock trading is swing trading. So pretty much what I do is I look for high quality bases and high quality stocks, and I try to take them for runs. Basically is what I do. Very similar to the IBD method, Investors Business Daily. My most reliable indicators are the 50-day moving average, price and volume. I don't use RSIs. I don't use any of that stuff. I try to keep my analysis as clean as possible. And so what I try to do is I try to hold stocks for weeks and months. I try to get moves like Workday. Here's your buy point. I'll hold this until I see some distribution, and then I'll get rid of it. Or if the market cycle is healthy and stuff, and I have enough profit, I'll hold through earnings. Other than that, try to usually get out of things before earnings. Twilio up another 2.5% today after yesterday's breakout right there. That's kind of my little measured move up to $88. Looks like it may get there in quick fashion if this continues. My most reliable indicator are chart patterns and trend lines. That's pretty much it. I don't have RSIs up here. There's really no need for it, to be honest with you. I don't do shorter term trading. I trade options as well, and I really try to capture great value out of the options market if I can find it. So I follow the momentum stocks, the movers of the day, like Cron here. And Cron going right back up, so no gap and crap for Cron. Not yet. It's only 3 minutes in the day. Give it some time. So Cass was leading at one point in time. BLFS, my rocket ship of the day. Well, a couple days ago, we were watching BLFS over here after earnings. Had a good day. So far up about 18%, 19%. Stitch Fix, love Stitch Fix. Working really well. CDNA, remember this on earnings? We had earnings here. We had the bull flag. Then off to the races there. We had Whiting Petroleum. Or still have Whiting Petroleum. right, they're kind of living above the trend line here. Volume not very ecstatic yet. Okay, that was that one. And ServiceNow. Actually, IBD just wrote an article about them, which could be why they're popping today. I've known about now for a while, but it looks like it's forming a flat base according to IBD, so everyone and their mother's buying the base early, as people tend to do. 1, 2, 3, 4, 5. So this is already essentially a flat base as long as it closes under the 195 level. How do your returns compare to versus holding an index? So really well. I mean, really well. And every individual's whoa, Bitcoin had an 8% wick? What? Are you serious? Sorry, I gotta jump to Bitcoin for a second. On what exchange? Probably no, not Bitfinex. Okay. Yeah, so traditionally I didn't see it, Eli. So your index is going to give you 8 to 9% returns. Oh, BitMEX? Wow. That's crazy. So crypto's not a Ponzi scheme. It is insane is what it is. So last year my returns were extremely good, and due to a number of factors. One of them was just the type of the market we were in. The other was the fact I was trading options. This year my option strategy hasn't worked out so well, and I made a mistake on Twitter earnings. So most of investing comes down to how you manage your portfolio and positions, not necessarily the strategy. Now your strategy is very important. You have to have a good and a valid strategy. But if you mismanage it, you're gonna hold through blunders like holding through earnings on Twitter here. Not a good idea on my part. But traditionally, if you take a breakout stock style, you'll typically get over 15% returns if you follow the rules and do everything correctly. In an extreme bull market like we've had the past couple of years, you'll do 30, 40, 50%. Some years you could even do over 100%, but those are going to be few and far between years. Me last year I was well over 100%, multiples of 100% as a matter of fact. Stops helping or hurting more? Stops are double-edged swords, but you have to use them. Sometimes you get stopped out and then the stock goes back towards your direction. Yeah, but like if you follow the best stocks, you very rarely get faked out. So down here is my current watch list, the ones that I'm really looking at, like, ooh, BE, wow. So BE's breaking out right here. This is an ICO breakout on BE. Damn, I figured it was going to do this today too. Look at that beautiful run up. You can't see the volume because I have a 50 average on it, but probably a pretty good breakup here. But no, you have to have stops while you trade. Otherwise, what ends up happening is you have no money. And you end up losing trades for a long time, and that's not good. You want to be involved in stocks that are moving up if you're trading. Okay, now if you're going to buy Amazon for 40 years, obviously you're going to kind of hold through Amazon and some of that FUD. But outside of that, I mean, you have to have stops. Otherwise, if you have, now keep in mind, we also have a very focused portfolio strategy. Ideally, have no more than 5 stocks. But the purpose for having no more than 5 stocks is so you're very focused on finding the very best stocks that you can find, and you're involved in the very best stocks, and you're just letting it go. You're letting your stocks work. Now, it doesn't mean you don't keep an eye on them. You do keep an eye on them, so it's a much more active strategy than just a buy and hold on an index fund. Look, so my default for people is buy and hold the S&P index fund. That's it. I mean, very simple strategy for people that don't want to actively trade or actively look for better returns. But if you do want better returns than just an index fund, in my opinion, I really enjoy the strategy of looking for high quality, highly fundamental, high fundamental quality, good earnings per share growth, all that stuff. I mean, this isn't just trading chart patterns. This is trading chart patterns in the best companies. So if I see a chart pattern in a garbage company, I won't trade it. The chart pattern has to be good, and the fundamentals need to be good too. And so, you know, like Coors here has a very beautiful chart pattern and good fundamentals, has growing earnings, all that kind of jazz. And so you can see there's a run up. This is what's called a base. It's a sideways to slightly downward action. Here's a slightly downward action base and fizz. This is what's known as a double bottom. And then here's a cup with handle inside the double bottom. Both imply something, and in theory, both should move to higher prices. Now, if they don't, bases can fail. No strategy is perfect, but by having a more active strategy, what I'm able to do is two things. Number one, I'm able to hopefully be in the stocks that are moving, and there is part of the it's not really a gamble, but you are taking a gamble that your stock is moving higher versus just buying the index fund. Also, it gives you the ability to keep an eye out on the whole general market, and with these strategies you can actually time the market and when you're going to get in and get out of the market altogether, so you can avoid. So this is the NASDAQ right here, and for instance, I actually sold most of my stocks up here. This is a daily chart of the NASDAQ. If you look at the hold on, that's not the right, here we go, this is the right part. So I actually sold most of my stocks early on this day right here, believe it or not, and then we bought back over here once we crossed the 50-day. Notice I wasn't in here. I didn't sell up here. I didn't sell up here. I didn't buy down here. I didn't buy down here. We sell at realistic price points. The market was looking really bad over here, so I actually liquidated my positions here fairly early in the day, probably right about here, and then we bought back over here. Is it a big difference between 68.89 and 67.54? No, wasn't a major difference. Some stocks did move without me, and that's okay. And other stocks tanked, and I saved myself from that calamity. And then I got back in here. So we kind of pick and choose our times to do our things, and I think that's good. Do we miss a signal from time to time? Absolutely. But over the long run, over the long haul, this is a much better way to get returns, in my opinion. If you've got the time to look at the markets, learn the markets, and if you don't, index fund. There you go. So going back to a stop. I have a little bit. How much time do I spend a day? Well, when I first started out, I would spend about 2 hours a day, and then as you kind of build your watch list and kind of keep momentum going, you can probably drop it down to about an hour a day. Okay, it just depends how much time you want to spend and how much you enjoy it. I just like doing it. Oh, ANET jumped. Here's another one here's a very high quality stock with a very high quality pattern. Just gapped up today. How is that not on my list? It wasn't on my pre-market movers at all, but it gaps up freaking 5%. I hate that when a stock gets away from me. Although technically it didn't because it popped yesterday. Go ANET. That's fantastic. But yeah, I mean, once you get a general sense of the market, what you can do is basically spend like an hour a day, half an hour a day going through what you're looking at. And then on the weekend, you spend like two hours, maybe 3, depending on, how fast you do things. And then, you kind of go through your whole watch list for the week, see what's setting up, things like that, things of that nature. Then you can make your current watch list. And I hold 2 watch lists. Some people hold 3. You'll hold like a global universe of high quality stocks, and then you'll have the ones that are basing and the ones that you're managing. Oh, you can do 30 minutes, Eli. It's if you do the work in the weekend. You know what I'm saying? Like if you spend those 2, maybe 3 hours on a weekend actually going through and maintaining your watch list. So here's the thing. If you enjoy it, it doesn't matter how much time you spend. Who cares? You know what I mean? And if you don't like it, go trade an index fund. Done. So, but if if you're really on top of your stuff, you could do 30 minutes a day. But if you're that much on top of your stuff, you're going to spend more than 30 minutes a day. So, and there's another, you can also take the strategy of you can have an index with, like 80% of your portfolio and then trade the other 20% with a different style, and you can see how your performance goes over a quarter and see if you need to maybe, add things, stuff like that. Don't trust yourself to trade. I've just tried stock picking. So this is basically a different way to stock pick. So with any strategy, you have two sections to your thing. You have generating ideas and you have executing the trade. Okay? So executing the trade actually doesn't take very long at all. It takes 1% of your time. You should have a strategy based around that execution, but generally your trade ideas will take up a vast majority of your time. And that's kind of, what it is. So have you read Fooled by Randomness by Nassim? No, I have not read that particular book. I think I know what you're talking about, though. They talk about random theory and stuff like that. Look, I'm dealing with the top 10% of stocks in the market, period. That's what I'm dealing with. The top 10% of stocks. I don't really deal with micro cap stocks. I don't deal with, any of that stuff. I deal with the top stocks in the market. So, yes, there is some randomness. Absolutely, it is the stock market. There's, hundreds of thousands of people trading this, and so there will be some randomness involved. But at the same time, if you're dealing with the best, odds are they're going to be behaving very, very well. And here, ANET, we've been watching ANET for a long time, and here it just gaps up for no apparent reason. Yes, so the way the stock market works, Grazier, and this is well worth what you're paying for this session. the way the stock market works is like this. You have different baskets of investors. You've got value investors, and there's in-betweeners, obviously. There's in-betweeners. You've got the bond guys, the gold bugs, the commodity guys, and in the equities markets, you've got the value guys, the pension guys that kind of go for like dividend stocks, and they'll do if something's down really far, they think it's good value via PE ratio, they'll go ahead and buy it. Then you've got variations of growth, okay? And there's variations of growth. I'll just say that. There's probably like 10 or 12 if I really sat down and thought about it, different ways that people trade growth stocks. But the people that trade growth stocks, what they're looking for actual growth in companies where the revenue is going to increase, the profits are going to increase, and they pile into those companies. Now, the market is broken down into sectors, okay? Various different sectors. You've got energy, tech, cloud computing, chip manufacturing, retail, housing builders, all these different sectors around the market. And as the economy ebbs and flows, those momentum investors, those growth investors, they're not really called momentum investors, but the growth investors will move money in and out of those sectors. They'll move the money around. It's called sector rotation if you ever hear about it. You can Google it if you want to. But they'll move the money from one thing into the next thing, into the next thing. Or what they'll do, is they'll, whatever their method is, you say you have use a valuation method on them. I don't know if you want to elaborate on that. That'd be fine. That'd be great if you want to elaborate on what you value them on. Is it a PE ratio? Because it's really weird. Amazon had a PE ratio of like 200 to 300 for a long time. Current quarter earning, they were at like 100 plus they may still be 100 plus, and you see what they've done. So, it just depends. What I use, I basically look for estimate future earnings and revenue. That's a lot of work. Yeah. So what I do, okay, so this is the second half of how the market works. All right. And I'll kind of breeze you through that. So you're looking at Arista Networks here, very, very high quality company. This is a stock that's been moving too. How does that work for you? How's that strategy work for you? All right so far? Well, you want to give me a couple of the names that you're looking at, and I can show you how it maybe pertains to my method, and then maybe we can compare notes. That's always good. Hey man, I'm not opposed to a new tool bag. 12 to 24 months for any results. Yeah, see, my thing is like results in a few weeks or nothing. So, if I'm going to be invested in a company, if it's behaving well, I'll hold on to it. If it's not behaving well, I will cut it. So, it does come down, they do have to have good growth. They do have to have good fundamentals. So, like Arista Networks, last year, first quarter was 104 earnings. This year was 171 earnings. That's almost a 70% EPS growth. 93 cents, 166. 60% EPS growth. 162, 193. Or 134, 193. Oh, so yeah, you're looking at very small cap companies. Yeah, see, I wouldn't touch that with a 20-foot pole. ASX, MYX. That doesn't look right. Oh, so you're in your local. Okay, I'm not sure what it is. You're not in the US. Oh, American stock. Oh, Australia, not American stock. Okay, so yeah, I do that over here in TradingView. That's okay. So chart patterns are fairly universal. Okay, so that's actually not bad. That's actually really nice. So what you have here is essentially, so you have the gap up. Right here you have a cup with a handle base. Here you have another cup with a handle base. So one cup and handle, two cup with handles. Then you have kind of a flat base up here. So yeah, this one looks really good. When you can start to ascertain chart patterns, then you can, these may be difficult for a lot of people to spot, but here's a cup. Here's a cup right here. And then you start forming your handle. And here's another cup with a handle. Both work out pretty well. This one went up 100%. That's fantastic. This one still up huge, so that's great. An ALU. Oh, that's what I'm in right now. Am I in APX or ALU? I'm in ALU. I need to go to APX. Okay, so that's pretty good right there. I don't know when you got in these. When would I sell ALU? Well, it depends when you got in. That's how profitable you are. So, like if you bought down here, you can still hold this thing. So one major way to sell, and this should be pretty universal. I think, I don't know about, I haven't done much outside of the US, so you can go back and check this out, but I'll give you kind of one of my top tricks here. Wow, $6 average. That's fantastic. Okay, ALU is $8 average. Okay. All right, so here's the 50-day moving average. I usually follow the 50-day moving average. So it can undercut during the base, but when it starts to run, so here you can see the gap on the cup with handle breakout right there. So if you and it looks like you're making money with your strategy. I don't want I'm not going to fudge you out of it. I'll just explain to you how I would handle this. So here you have a cup with handle. You would buy on you can buy in this little gap here as an early buy point. You see how volume increases out of a very low volume area? That's pretty ideal, as a matter of fact. That's really ideal. Volume gets really low here, then boom, you see a big volume increase. This is professional money at work. That's what we try to follow. We try to follow the professional money. And then, okay, well, yeah, that's fine. So then it breaks out. And then, so this 50-day moving average, notice how it respects the 50-day all the way up. You can usually buy the first 1 or 2 pullbacks to the 50-day. Those are add-on points. There's other add-on points, 3 weeks tights pattern, 3-week tight patterns. And then what you'll look for to potentially exit is a clean and fast break of the 50-day. Like this could have been a sell signal right here on that hard break of the 50-day. That could have been a sell signal. Okay. Now again, this is a trading method. This is not like an investing method, so that would have netted you 131% gain if you would have sold there. Now you're up a lot more now, which is awesome. I love it. Yeah, you're up 200%. So you can use similar methods. The fact, so then it gets a little muddy. Like if you want to hold on to this, you can, like if you wanted to hold on to this, you could use of this whole base. This would kind of be your low point. If you wanted to, you could get. You could use that as a potential stop loss point if you still liked it. Like if nothing changed from your fundamental perspective, nothing changed from your fundamental perspective. So if it didn't, if everything was still good, then you could have held on to this. You can, a lot of people that use technical trading, they use it in various ways. This, I would kind of, I may grab that gain there and then try to move to the next one. It just depends. That's what gets me. Trading means there's a good chance I'll miss out on future gains and pay tax. Yeah, but also, so it's a dichotomy. Everything in trading is 50-50, right? There's nothing good, there's nothing bad. You can have a great company fundamentally that trades like garbage, and then you're just stuck in the doldrums. You're just stuck in the doldrums of that position, and there's going to be points where the technical trade will get you into something that you may not necessarily have been as interested in because it looks as good fundamentally. Maybe you'd pay more, or technically, maybe you'd pay more attention to it. So, but you're up 100% in this stock at this particular point in time, and so you have some latitude up here. If you want to give it to like the low point here of this breakout and let it work, you can do that. You don't necessarily have to sell right there. Okay, you don't have to. So let's look at some other ones that you mentioned there. Why don't you mention some of your, so I'll go through these if you want to mention some of the ones you've had losses in, and then we can go through that and then see how charts could have helped you there. Okay, so this one, so big gap down. So first things first, I mean, there's obviously a big gap there. That's to be expected right there. You'd buy at my sell point, and that's what makes the market, my friend. That's what makes the market. And I mean, for real, I'm not dogging your strategy whatsoever. I'm just kind of, every buyer has a seller, every seller has a buyer. So it's actually pretty cool to talk to someone that thinks my sell point is a buy point. I love that, actually. That's pretty cool. So here's an interesting one. My buy point here, which would be a very early buy point for me, would be right about there. So the whole thesis behind my strategy is that new highs leads to new highs. That's the general thesis behind this strategy, is that every stock that goes up, and here's a big cup with handle right there, every stock that is making new highs makes new highs and continues to make new highs. So let me, actually that's not what I wanted to show you. So here's a big cup with handle right here. It's a little low. It's a little low for a handle, but you could still call it that. And then once you make a new high here, it basically doesn't stop. I mean, this is at a very basic level, very basic level what the strategy is about. And the chart patterns, when you get decent with the chart patterns, they start to show you accumulation from institutions and large purchasers that basically make these runs occur. That's the general thesis behind the strategy. So you're looking for value while other large institutions are looking for value, and I'm looking for those institutions finding that value, and we try to go after them. So the stock goes up due to institutional interest, and in both instances we're making money off the same people. So in this, like if you're interested in this one, there's a couple things I would note right here on here. Number one, so we had a big breakdown, okay, and then we came out and we started rounding out. Remember, we're talking about things going up in support and resistance is what we're talking about. So there's a support level here at this low, and it never gets, there we go, let me get rid of these. Notice it never gets undercut. This low here never gets undercut. And you also see a spike in volume. This is institutional investment providing a floor. Okay? Now, it doesn't always work out. Nothing always works out. And then there's other stuff you can do. You can draw a trend line there to try to get interested. This one obviously gapped up pretty nice. This one gapped up pretty nice, but what you see is you see the rounding bottom. Like you look at this low, it was undercut. This low was undercut. This low was undercut by this low, and then this low was never undercut again. Not yet. I mean, maybe it reverses. Who knows? But so this could have gotten you interested if you saw this one. You noticed it had a higher low. You're zooming out, you're like, okay, the momentum to the downside is waning, so that's good, right? And then you're like, okay, went above the 50-day once. We had a rally, then we came back down. We have a higher low in place, which is good. Now we have this very well-defined trend line, and then we have a lot of volume coming in here. You could get involved, from that perspective. That could kind of show you, like if you're interested in this from your perspective by taking the price analysis perspective in concert with yours. This doesn't override what you do, okay? But what this does is this augments it. And all technical analysis should do is augment a trading style. My trading style is to try to find high growth companies that are doing well and behaving well and getting in at a proper buy point. Your style is looking for good value, and then what you can do is you can use this to notice support. You can notice support, you can look for early breakouts, things like that. So it takes a while to get the eye for it, to be honest with you, but when you do, it can be pretty powerful. So here, what you have, and notice how I started out big and now I'm going in small. Okay, that's one thing to notice. So going out big, we see the gap down, we see the rounding bottom action, we see the high or low, then we zoom in, we have a well-defined trend line. I see two lows here at about the same level, and then I also see two highs at about the same level. Now, anytime a prior highlight, in the same way that those lows kept being broken to the downside until they didn't, now we have a high here that was broken. So this high was broken to the downside, moved to the downside again. All these highs were broken until finally, actually you can even do that again. Right there, this was broken to the upside, and then you're like, okay, and then what you see is this is what's known as a swing high. This is a major outlying point. It just kind of sits out there in the middle of the sky. This is kind of chopped around a little bit here. You see there's 1, 2, 3, 4 touches to it. This is a very extreme early entry point. And another thing you'll notice here going in deeper is that as we get to this to the swing high here, once it crosses this high, see how it chops around, stops right here, and then reverses, and then it's respected here. So now what's happening is, in a nutshell, the buyers and sellers are buying and selling and selling and buying and selling and buying and selling and buying and selling and buying and selling and buying, and then it breaks out. That's not a coincidence. That is not a coincidence. This is a function, and notice what happens to the volume too. You see low volume and lots of red to more green and less red. You see the general color shift there? Even before these two candles, look at that. All this action right here, there's like 6 green days, 4 or 5 green days, and then it takes off. I'm interested kind of right around this area is where I'm interested. The same thing you're doing, this augments it. It's not perfect, nothing's perfect. Like if you're interested in this, probably the strategy you could take is that if you notice this action, maybe you take a 10-20% position as you see it tighten. Maybe you take a little more position. If it fails, then you're not down a whole lot. Maybe you give it more time. But if it breaks out, you jump in with the rest of your position instead of like layering in as it's jumping. And so that's kind of what you're noticing there is this is the sellers. What this means is no more sellers. That's all this means. I'm looking for buyers and sellers and what they're doing and trying to ascertain if there's more buyers than sellers. And that's pretty much what this little pattern shows you here. So this is a general trend. Here's a general trend. And then you have a general range. It's range bound at this particular point in time. Let's look at another one. Sitting on 30% cash still, so this may keep me 100% in. Well, it's always good to have cash. You're never going to go wrong by... I like this exercise. This is fun. Okay, so you got TPM, CTD. Let's see if we can see something similar. I'm going to breeze through these. I've got to go here pretty soon, but I'm having fun. So if you want to come back tomorrow, Grazier, that'd be awesome. So this thing is in a perpetual uptrend. I see a series of bases. I see there's a flat base right there. I see that there's a base right here, and probably what could be considered a cup with a handle. Here's your cup, here's your handle. This would be considered a double bottom base in a perpetual uptrend. Not sure where you got in here, but there's just some basing going on there, and just a general run up in trend. So one good thing is you see the volume. This orange line is steadily increasing. That's your average volume, so that's good. 20-ish. Okay. Yeah. So here's your base, and what a base consists of is a swing high where price stops and then goes down or sideways. Here's where price goes down. You see those highs get lower and lower, and then finally it starts to reverse right there. You have a higher low. Then it starts to go up. And then here you have the price goes sideways. You have 1, 2, 3 touches, and then it kind of pops up there. And then we've got FXL is one you mentioned that looks like you had a loss in. Let's take a look at FXL, and we'll go back to the other ones. So yeah, this is in a perpetual downtrend. You see the opposite of those. This one's pointing down. It's starting to flatten out here a little bit. You may have just been early, and there's a saying in the market, it's even if you're early, you're still wrong. So your thesis could play out, but you may just be early. So looking at this, what you see is you see the general downtrend. The highs are getting lower and the lows are getting lower. That's a general downtrend. Yeah, $3. There's no way I would buy here. I mean, so this, yeah, there's really no way to buy here. This could have been broken on a break of that. Remember, I keep talking about, things that go higher, things that go lower. Okay, there's momentum inherent in human nature, and you're actually trading humans, believe it or not. So there's actually that's what's called a bull flag. It popped up on actually pretty good volume. See the volume increased right there. Then it went sideways, but it never broke out. So in this situation, you can see it's very range bound here. When you see a range bound scenario, when it breaks that direction, it typically continues. And notice it never gets above the breakdown point right there. It tries to rally and fails, tries to rally and fails, tries to rally and fails, and then just has a series of lower lows after that. So this I would not have gotten involved with. There's no tight price action. This is tight price action, but it never breaks out. Okay? Now, you're getting a crash course in technical analysis by a guy that's pretty good at it. But something down here at the bottom so far is that we have, so here's another swing, here's kind of another mini swing high, and we have, you see the rounding out here? The lows here are in a trend line, they're in a trend, and so far this is breaking the trend. It's a little bit higher than it should have been. It should have been down here, but it's not. It's up here. So there may be a reversal of fortune. This is a situation where you just watch it. Okay, now if you break above this swing high here, like so here's your breakdown point right there. If you break above that, maybe you can get interested again. That's kind of how how I kind of view that. But right now you're essentially in a perpetual downtrend. It looks like it's going sideways, but it hasn't curled back up yet. So let's go back to the ones you like here. CDT, AXL. Okay, so here's another one that's in an uptrend. You can clearly see the direction, and hopefully you can see this tight price action down here. So there's your trend line. There's your breakout point. Looks like this is a recent IPO. So you see the tightening right here. It's getting tighter on the right side. Now what you have here is a flat base here, and so it's trending higher. It's trending higher. Now it's consolidating. Here's your breakout point. It's consolidating outside of the breakout point is what it's doing. And your volume here is pretty good. So it's trending in the right direction. If that 50-day line is pointing down, that's pretty bad mojo. But anyway, cool. Thanks for sharing. Let's see what the U.S. stocks are doing. Cron up 11%. Look at that. Bam. So here's another. We've been looking at this one for a while. Noticed, it undercut this trend line, but just barely, and then started rocketing up, and it's just continuing. BE. Ooh, getting up to 33. This thing's getting frisky. Yeah, Grazier, I'd actually be interested in how you value those things. Maybe there's a way to find some of those, because the movers you found are really, really good. I mean, out of every stock you showed me, the only one I wouldn't be interested in is that loser. That's pretty much it. And that's just because it's basically in a perpetual downtrend. But pretty much all we can do in the market is try to have an edge, try to have something. And so far your strategy looks like it's working good. You've got some that are up really high percents. And so I like it. And Workday here working out pretty good coming out of this flat base. Still rallying. Earnings coming up though. And you still got a long time before earnings. That's going to do pretty well there. FIVN, Shutterstock doing pretty good. Twitter looks like it's trying to finally move higher for a minute. FIVN doing good, having a pretty good day here. Twilio pulling back in a little bit. T-Mobile, Match.com, Coors. My early batch of movers is not moving now. They're just not moving now. Regeneron regenerating slow returns. Generac. Can try catch up with you sometime. What's the best way to contact? If you want to give me like a really in-depth synopsis of what you do, which I would be interested in, you're finding good stuff. You can actually email me. And my website's Real-Crypto, as a matter of fact. I kind of became a crypto guy, but there's my email. You just email me directly right there, Randy@real-crypto.com. And I've been trading stocks for a very long time, and I just got into crypto last year, and it kind of blew up. So I do that, but I'm trying to get everyone involved in stocks again. There's my ugly mug, and there you go. But yeah, you can find me there at Real-Crypto. If you want to chat more real time, I actually have a Slack chat room. It's mainly crypto, but we do talk some stocks in there. So you can sign up for that at my homepage if you want to, and you can direct message me there as well if you want to talk in real time. You can do that. So just sign up right here. It says sign up for newsletter and free chat room. I actually have never sent out a newsletter. Eli will tell you that. I've never sent out a newsletter. I'm not a marketer. I'm more of a trader, but I got to kind of do it to keep things flowing with the company there. So I got to run. I got to get kids ready for school. That was fun, Grazer. I like how showing you how TA works in another trading environment. So that's fantastic. But ANET 8%. Wow, freaking ANET. That's great. All right, guys. Matt here. See you tomorrow.